All right, today was a little quicker day than normal. We're done at 10. We were really done at probably 10:30, but done at 10:51. Today is a I'm gonna look at it very positively. I made $100, but I missed out on a 1,000 point trade, and I'll get into that. Um, Sometimes you just are too unwilling to, you know, take what the market's telling you and trade off of it. All right. So going into the day, we were still in this range here. This is why I didn't take any trades yesterday. I took one, but I didn't take any trades here because I knew that until this high on NQ or ES needed to be taken. I knew this high was going to need to be taken on one of them, or this low here. These like equal lows. So I was waiting for one of them to get taken on NQ or ES. So you see the same thing. So I knew that until we got a manipulation, that's like an AMD, which is accumulation, manipulation, distribution. I'm sure everyone that trades ICT knows that. But normally you just expect price to accumulate, get a little poke above price to fake people out, and then take out all the liquidity and then dump in the real direction. So I was pretty bearish anyways because we had this entire move. We're just consolidating equilibrium. And just on the bigger time frame, high here, like it looks like we're trending down. So anyways, I'm going to the day, and my first trade was on NQ. Okay, wait, yeah, on the NQ. My first trade was on the NQ, and I'll get into this one real quick. So basically, we left the high at the red line here. We came up market open, left this high as well, relative equal highs. We come down and sweep these lows out, which at the time created an SMT, a bullish one. So I was like, okay, cool. We're in this imbalance, which was also a 5-minute. When you look at a 5-minute chart, it was this 5-minute fair value gap, bullish. And then I was looking for this bearish imbalance to get broken. What ends up happening is we obviously run through it. So we inverse that fair value gap. I jump in long here. So I jumped in long, and I was going to target here, maybe take off here, but then I ended up taking off the bodies here at 13 points. Just a quick little scalp, just because at the time we had already taken the high on ES. So that was a nice little trade. The one thing I think I could do better is when I got into the trade, I was definitely really nervous. Like my heart started beating a little bit. Because I wasn't quite sure. We had already made the SMT, so probably wasn't the best quality setup, but we capitalized a little bit, and that was our trade. So that was the trade we took because of everything: SMT, sweep of liquidity, holding in balance, inversing, equal highs. I like that setup. The only thing against the trade was an SMT at the high, which in turn probably was the reason why this didn't reach full take profits. Overall, I would say that's honestly A minus or maybe a B plus trade. So after that though, if we go back, we will see the SMT. So this is where I went wrong. When we formed the SMT, come on. When we formed this SMT, I didn't give it much weight. And the reason for that is I normally like to see SMTs be a little bit more clear. I don't like equal high SMTs. Because if you see here, this was our SMT in the range. We take liquidity from the high of the range, which if you also notice, we took the liquidity here on the downside, and then we just kind of accumulated, but still eventually got to the high side. SMT here, we have equal lows down here. But since we left equal highs, I wasn't super convinced. This is where the trade really came in though, is on the ES. We end up getting at this point, so this is where the market opens. So now that we know to the left of as a context, I can explain where I was looking at price here. So when ES sells off on the 1 minute, you'll see kind of the difference, right? So we sweep the high. We swept the high, we had an SMT, and then we dumped on ES. But at the time, that created another SMT. So here, I was like, okay. At the time, it was looking like maybe this would just be an SMT to maybe push price up and get the equal highs if we inverse this area, because we're failing to really displace lower. But that didn't end up being the case, and I think that's why I was still not able to flip completely bearish, even though on the day I was bearish, wanted to see this high get taken and then sell off. I wanted to see that, but I couldn't flip bearish until I wanted to see these equal highs, and I just didn't want to short and then lose to the equal highs and be like, why did I short, blah, blah, blah. The best model comes here. When we set these highs here, this is actually just a 5-minute imbalance right here, which then becomes a 15-minute imbalance. So the 15-minute imbalance gets touched on ES. So if we put this in, bearish, very, just perfect model. Take the high, SMT, create a 15-minute imbalance, pull back to it, sell off. When you look at it, when you go fractal, because price is fractal, and you look at this chart, notice when we get the reversal. And this is what, even if you're kind of newer to trading, this is how you can look at this, and it'll blow your mind. Because when you can understand this is when you'll actually start to really see some real progress trading. So notice on NQ how we're in this 1 minute or 5-minute bearish fair value gap. I was married to the bias that we were going to reverse here, take the highs and then dump. We had an SMT, we didn't need to go higher. Anyways, notice price. We put in these highs here, which becomes the top of the 15-minute fair value gap, which in turn becomes like a turtle soup or a liquidity grab. Notice the cursors lined up. We create the 5-minute fair value gap here. Same spot as ES. We don't rebalance yet on ES. We don't rebalance here. What do we do here? We create an SMT, an internal SMT. So what happens? We have an SMT. We sell off again. We take the low here. But then what happens here? When ES gets in here, what are we doing? We are sweeping liquidity out of the market inside a 5-minute fair value gap, inside a bearish fair value gap. We have an SMT at the top. We displace lower on ES. We're now in a 15-minute after a big break of structure on ES. And ES price moves a lot more fundamental, I feel like. When you get a break of structure, you get a real break of structure, and it typically works. We get a break of structure to the downside after creating an SMT, after taking liquidity. We dump down. We put in a 5-minute fair value gap that rests here, a 15-minute here on this candle. What do? We wait. We come up. We fail to go higher. We grab liquidity here. Anyone that moved their stop here, 15-minute fair value gap, an area you expect to go lower. And then NQ as well, turtle soup, inside of fair value gap, the 5-minute. Everything's aligned to shorts. We then even sell and create a bearish fair value gap that never gets disrespected. So now we're delivering from a smaller time frame fair value gap, right here, a 1-minute fair value gap, which then we inverse the 1 minute that's holding us, but the real one would have been in the 3-minute right here. Once we inverse this, you could have jumped in shorts. I know this is what Dodgy took because I saw it on his Instagram. I don't trade in his live Discord. The only reason, or there's a few reasons I didn't take this short. Your risk would have been all right, 36, but your RR is crazy here. 100 points. Let's just move it here. 100 points. And look, that thing kept running. But anyways, 100 points. That was a almost 3R. And it never even tested you. The only reason I didn't get in here, and look how perfect this is. when you really explain the confluences, it's almost like price did exactly what you could expect. Higher time frame, like if we just go on NQ here, higher time frame range, we sweep out liquidity of the range like we wanted to. We sweep out the range liquidity. So now we're expecting to see lower because we don't need to go here. We displace with the 5-minute bearish fair value gap. ES displaces a lot better, breaks the structure to the downside, creates a 15-minute fair value gap on ES. We stall. ES, when ES finally taps the fair value gap and doesn't go any higher, wicks it. We turtle soup, we grab liquidity here. We make a bearish fair value gap on the smaller time frame, and then we inverse a bigger time frame fair value gap bullish. The main reason I didn't get in is because we were so close to taking this low from the entry. That was it was like 2 ticks away. I should have got in regardless and just had a stop loss, not worried about going to break even and let the trade ride, because we did have this target to go break even. This could have been our break even target. A lot of mistakes about not getting in here, but I'm not super upset because this is just super clear. This builds experience, this builds conviction, and when you really understand this, if anyone's still watching this, watch this video back because I might have explained it bad or quick. Watch this back as many times as you can until you fully understand what I'm saying, because when you see the market like this, you'll never see it any differently, and you'll actually understand where price is going, and you'll actually understand how you can catch these moves. Again, I missed the move. I'm still trying to build my experience, trying to build that conviction. I missed this move. This was the best. This is probably going to be the cleanest setup of the week, and there's a few things that were going through my head. There's a few reasons why I didn't. Let me clear the charts here. There's a few reasons that I'll go over of why I didn't place the trade. But first of all, let's go over what we did well. What did we do well today? We took a decent trade based on expecting price to go to not take profit, but expecting price to go to the highs. We also recognized equal highs and didn't get impatient to take shorts. So even though I missed the shorts, I'm glad I didn't just jump into shorts, because I could have jumped into shorts on this fair value gap or this fair value gap. Again, I would never take those because there's a reason I didn't take them. But if I was getting over eager, I would have taken that short. Oh yeah, regardless. Okay, I don't need to keep typing out, but that's what I did well. I also did well about knowing when to step away. I stepped away after I saw this low get taken after this, because I know that was what I was looking for. I was looking for this trade. Anything else, we're probably going to stall before news tomorrow. This is exactly what I wanted to see. I saw the model get completed, and I know if I trade, it'll be on paper. 100% will be on paper. I will not take a trade today, no matter what. And I got in the market. I saw what I needed to see, and I got out of the market. So I did exactly what I needed to do there, and I'm not being undisciplined to go chase the trade because I didn't get to make the $1,000 I should have made if I took the trade. So again, another good thing. Now into what I did wrong. I got too caught up in wanting the market to do exactly what I wanted it to do. Even though based on what I explained and how I look at market, I knew exactly where the price would go, and I can explain why this worked so perfectly. But at the end of the day, there was a reason I didn't take it. And that reason was because I was so married to these equal highs being swept first that I couldn't allow price to tell me, okay, we have an SMT. We have a bearish fair value gap that's getting respected, and we ran this inverse. We have an ES 15-minute after displacing really lower, and the draws lower. I couldn't accept the fact that we had equal highs and that we had SMT, and I didn't allow myself to take what price was telling me and trade accordingly. I was too married to my bias. I was wanting to see it come up here and then do the same thing. So I didn't need price to come up here and sweep liquidity. There was no need for price to do that, and price was telling me it wasn't going to do it, but I didn't adapt and I didn't switch. And that's a big reason why most people miss out on trades, is they can't switch to what the market is telling them, because the market will feed you information and will tell you when to trade it. It told me right here that this was going to be the move. Did I think it would be this aggressive? No. But the market tells me this trade is about to happen. We're going lower. We're not coming up higher yet. Who knows? We may come down here and come back up, but we're not going higher from this point. We will go lower. I also get too caught up in the fact that I was up a little bit on one trade, and I was kind of wanting to see this. So I was even on my practice account when this trade was setting up, and I still just didn't find an entry. But I'm too afraid after I take one win to try and take another trade, because I'm afraid to lose on the day after taking a win. And I also am not a fan of how upset I was for missing the trade. I wasn't like upset, but it definitely stung a little bit to not get this trade, because it's like, man, how come I didn't get that trade? But so that's what I could have done better, is just being able to switch my bias quicker, or not be married to my bias. So how was the best way to put that? Being able to adapt to what the market's telling me. Whatever this caption is what I'm gonna find it to say. Not being able to. Regardless, I'm gonna end this video here. Again, this is a massive confidence building day, because exactly what I understand price to do played out perfectly. I just wasn't reading it live. I got that live. I got that forward testing. My idea, my mind was working, but I didn't execute. And that just is confidence. That's experience. That's screen time. We will get there. And that's what's nice, is because I'm seeing the stuff that I know, and where I know I can trade. I'm seeing it play out, and I'm just not getting in on it. The $1,000 I missed out on today is not a big deal, because it's the skill and the experience that I gained today that is way more important than if I catch this move on my funded account. At the end of the day, that $1,000 won't matter, except for the habits I'm building. So stepping away after the objectives taken, realizing the market moving. But I was just a little bit afraid today, and that's something I want to change. And I need to take what the market's giving me and react to price. So that was a trading review for today. Of honestly, very, very clean day again. I mean, exactly what I want to see. Confidence builder. Made money anyways. I made money in this trade, just $100. You know, it would like to be a lot more, but you know, I didn't make no money on the trade. I didn't not trade at all. I didn't not take any winners. I got one winner. I just missed on the big one. And you know what? These types of moves happen every week, and every day you could find a move that's 40 points, 30 points. So there's endless opportunities. The market's abundant. Money's abundant. I just got to start believing it, and I am believing it more, because normally I'd be trying to find some longs here, maybe get in here and go short again, and I'm so unbothered to try and find a trade, because this was the trade, and I just wasn't in it, and that's okay. That's the charting session. This is probably my best trade review ever, which is crazy. So anyone that's watching this, I'm happy for that 60 subscribers. This is pretty cool. I'm trying to get to 100. I'm honestly trying to get to that 1K subscribers. My main YouTube channel has like 500 subscribers, and I actually really try on that account. And this one is just fun, because I get to come out and talk about trading and record myself, talk about the market reviews and stuff. So if you enjoy this, trust me, there's going to be so much more value in the future, because I will be profitable trading. I will be. So right now you're just on the journey to get there, but stick along, because there will be some crazy value. And you're going to see the real deal. You see my emotions and everything that I go through when I'm trading, and you're gonna see the real deal, and you're going to see what's like to really trade and really get profitable from nothing. So the 60 of y'all that watch it, that have subscribed, and some of y'all that watch these videos, I do appreciate it. I never started this channel to get views and stuff. I did it as a journal so I could do this, which is talk about the chart and get better. Because me analyzing, doing an analysis of the chart tremendously has helped my trading because it makes me go back and really reflect and learn. So I'm very happy for today. Madrid play against Manchester City in the Champions League quarterfinals. Madrid are going to win today. It's going to be a great day for Madrid fans. If anyone's a Madrid fan, somehow, if one of the 100 people, the 100 views that this video might get in the next month, if anyone's a Madrid fan, comment that below. And if you got even this far to where you're commenting about Madrid, maybe you just saw the shirt, but if you're commenting about Madrid, you're a real one, because I can't imagine anyone's watching this whole 20, 30 minute long video. But best charting review I've done, best analysis. So happy with how the day went. Who cares about missing out on the trade? Maybe I do a little bit, but I'll see you guys tomorrow.